friends, this is Martin from Secret, the channel for learning about trading and investing. Welcome to the weekly market analysis, where we look at what happened in the markets last week and how we can plan for the next week ahead for trading and investing. So this is analysis for November 29, Monday, tomorrow. And let's get into the charts and price actions and patterns. Let's see what is that, right? So what happened last week? 730 nearly points lost. 4% fall and a very wide bearish candle. That's what happened for the second week of downfall, and the total correction from the top has now become 8.5% on the Nifty. And Banknifty, look at that, it crashed 5% in a single week with 1950 points or so lost, right? And 14% of correction has happened from the top. Wide range bearish candle. So it is heavy sell-off that happened on the last week. And Nifty daily candle, if you see, this is what we are talking about, the weekly candle. Look at the candle size, look at the fall, right? Look at the fall. This is like nearly 2000 points of fall, and this one single candle alone is 730 points of loss. Friday alone, Nifty lost 510 points last week, daily candle, just a single day. Right, it's at the 17k support levels. It's bearish right on the daily candle also. Banknifty also, if you see, 1340. This is one single candle on Friday, 1340 points are lost. Right, so that's what the charts are saying us, right? That's what happened last week. Bollinger Bands, if you see, it's clear, walking on the bands, bearish downside, volatility expansion, and that is in sync with Banknifty also. Both are saying that the Bollinger Bands are expanding in the bearish side also. It's clear bearishness, nothing else. Support resistance zones, if you see, 17,352. This is a mistake here. 17 it is, not 14. 17, look at this chart here. 17,000 and 17,050 is the support. Then 16,900, which is Fibonacci 38, which is also a support. And after that you have 16,700 to 16,750, which is a gap on the previous resistance, right? So the resistance on the upside. So these are the three supports, right? So starting from 17,000 to 16,700, 300 points is what we expect market to fall next week max. Probably it may go further, but this is the immediate supports that it's showing as of now. Resistance upside is 17,350 to 450 range, and then you have 17,550 to 17,650 range, then you have 17,800 to 850 range. That's the 600 range. 17,600 is Fibonacci 23, which is going to be the major resistance on the upside. Banknifty is 35,600 and 35,900 is going to be support zone. Is the previous swing low and the previous resistance area. 35,000, 35,300 is the next support, and after that you have 34,350 to 34,750. That range falls further down. Upside 36,300 and 36,500 is going to be the Fibonacci 50 resistance upside, and then 36,600 is going to be the previous swing low, which is the resistance after that, and then you have 36,900, 37,000 kind of range on the upside. This is what we talked about, right? So it's at a support zone at 17,000, 17,050. If it drops, it comes and falls to 16,000. In between you have Fibonacci green, what you see is Fibonacci 38. Banknifty, it's again at a support zone of 35,600, 35, and then if it falls further, you have 35,000, then 34,300, then 33,950, like that goes. On the upside, you have the previous support zones that have broken, previous swing lows, all will access this is the upside, right? So make a note of these levels on the upside and downside so that you can exit early, you can enter long positions or trade or do whatever. Everything depends upon what is your view, where you think the market may take support, or market may break support, or market may break resistance, right, or face resistance. So the momentum in the trend analysis is the next point. The Nifty continues to have lost momentum. Obviously, short term is around peer zones on the daily and sideways. Weekly had some momentum, that is also lost. Now it's sideways, and monthly still bullish. Banknifty also same, lost short term on to the bearish zones, and the weekly has lost to the sideways, and the long term bullishness is still back. That's a monthly still bullish. Otherwise, all that's a multi-time frame analysis that we're doing now. Another thing to note is that on the monthly time frame there is a 4-bar bullish divergence. Monthly time frame takes 1 month to move and confirm. So it is not confirmed, but with this month end, that is going to be December month end, if we are seeing a move above the low of previous November month's candle, then there is a chance that Nifty can bounce through. It takes a lot of time. It's a monthly divergence at bullishness that you are seeing. So there is no clarity on what would happen in the entire month or not. But in the next month we will come to get any confirmation if there is this divergence that is mentioned there, you are correct, right? So keep a note on that. Otherwise it's bearish. So the ADX indicator is a trend indicator. DMI negative is there everywhere on the weekly and the short term daily. And also the ADX strength indicator, trend strength indicator on the medium and the short term, both have lost. Both are, it's falling, right? It's falling in the sense the strength is, strength is increasing and the bearishness is increasing. Strength is falling and then bearishness is increasing. That is what overall it shows on the medium and the short term now. So that is what momentum is bearish, trend is bearish, charts are bearish, and this is the proof for that, right? See, it has gone below the sideways zone. This is the bullish zone, this is the sideways zone, now it is the bearish zone. Nifty, Banknifty says the same. It has fallen deep below the sideways zone. Divergence monthly that I was talking about is that, and then trend indicator is showing that the bearishness is increasing. The strength of the trend of bearishness is increasing both on Nifty. See that green thing rising along with the DMI negative on both. Now next is operating interest analysis and volatility. Volatility, what a move, right? It's like how much percentage? 40% shot up last week. 40% of week shot up, and it has reached, broken out of the 15-19 range, and it is now 20, about 20.8. Extremely volatile, very high new volatility range. This is what happened. Now IB is implied volatility, that is India weeks earlier than so. Now implied volatility is 17, which is below the 90, which is historical volatility. And IVP is also increased near the 50 levels, right? But you have to be extremely cautious. No, this is not the market cycle that we have seen previous to that. This is a different cycle that we have if it sustains, right? Now, open interest analysis is showing the Nifty is having long unwinding. Long unwinding is bearish. People are long, now it's unwinding and going short. Banknifty obviously it's short build that you're showing the future starts. Right, for the December 2nd, next weekly expiry, we see the highest option call writing is seen at 17,500 and 18,000, which is where the resistance is going on the upside. Downside 17,000 is the support zone that you can see, and after that you have a big 16,000 level of support. That's probably heads, not go there. Never know. Bank Nifty, the highest call writing is seen at 37,000 and 37,500 levels where the resistance is seen, and downside 35,000 is a good support, and 36,000 is also a good amount of put writing that is seen in supports. But call rate is bearish on both 0.42, 48. Bank, it's not bullish at all, and it's bearishness that is in the put call ratio also. So long while short build up on the futures. So it's all about bearishness, volatility high, open interest data showing bearishness, and put call ratios showing bearishness, and charts also showing bearishness, momentum trend also doing the same. So this is the bearish charts that you're seeing. A lot of call writing has got added up for the next expiry. It's not a lot of call writing. All greens are call writings that you're seeing. That means people are bearish. Now the sectoral watch, if you see, all sectors were down. IT fall down 4%, FMCG fall down 3.5%, metal fall down 2%, pharma fall down 3%. Now auto sector fall down 8%. Realty also fall down 7%. Auto and realty were the bullish sectors. All the gains are lost. Now, pharma is the only sector that has shot up 3.5%, right? But momentum is still short term and medium term different sideways. We'll have to wait for even going long on that. So, almost all the sectors have turned bearish on the short term and lost it to the sideways on the medium. So, you just have to wait if you have to buy stocks in any of the sectors. Institutional participation, if you see, 21,000 crores of selling has happened in the cash market by foreign institutions, and the total selling in this month alone right now it has become 31,000 crores, and the total last 2 months comes to 56,000 crores of selling that has happened in the FIA. They was bought some 99 near 10,000 crores last week, right? So that long-term derivative also has dipped. So That's a worrying institutional participation that you're seeing there. Now, global markets, if you see, US markets fall down because of the COVID resurgence. News 2% fall is seen in all the US markets, and all the other global markets also is seeing heavy bearishness, including the Asian markets. Now, dollar index was breaking out, but now if you look at the dollar index, it is a gravestone doji. That means the breaking out or strengthening of the dollar index has paused, and there is a chance for a bearishness down move back to where it break out or a consolidation. All of this can happen, right? But the dollar is broken out, and then only it got resistance and then fallen down. So big dollar breakout, and along with that, the interesting thing is the crude oil has fallen down below 68 levels. That is very good for our economy. That is the only thing that is good, right? Where a 10% fall that last week happened, it has gone to 83 kind of levels, and now it is 68, which is very good. Now, gold, obviously, when this dollar has shot up, gold gave 2%. It faced resistance zone where it is going up and hand. Overall, it is bullish, and the markets stocks are dipping. Then, obviously, gold is supposed to rise up, and it's definitely in this auction in the long term and the medium term. This is the crude oil charts that you are seeing. It's breaking out of a channel. This is the gold which is strengthened, which is face resistance at the channel top, which is the handle of a cup and handle. And then two stock picks for the next week. One is Bajaj Auto. We have already discussed about this in our weekly analysis shown. This is clearly a M pattern breakdown, and this was the neckline. It is broken out of that. This indicates that it can go further down. Hindustan Unilever is also breaking down from the channel. The momentum is lost on the weekly and the daily, and volumes are very less, and the trend is bearish. So Hindustan Unilever and Bajaj Auto, some trades on the short side. Now this is an actionable on the index. So this is nothing but a bear call spread. It's a credit spread, it's a vertical spread, and this can work out well when there is so. So if the market is falling backwards, you are going to gain. You have nothing to lose, right? And if the market is moving, as long as it does not move above 17,300 for the next few days of trading, then we gain. So most likely market is going to fall down or consolidate. It's not going to go up immediately, most likely. So that's the assumption the view, and it needs to be giving a reasonable risk reward and the probability of profit, and the lot size can be as per your risk appetite. So this is the way to go. So the wrap up on the analysis. Now Nifty has turned extremely bearishness in the short term has last week, and the bias for the short term is moderate bearishness, obviously, right? And that's because it has lost the momentum, the trend, right? And cause sector fall has happened. Heavy institutional selling has happened. India VIX has broken out with the prevailing volatile range of greater than 20, and then indicates very high uncertainty and fee because of the COVID resurgence news. Remember that market has corrected 8.5% on the Nifty and 14% correction on the Banknifty. But does not mean that it's going to stop there, will it? Right. So use the vertical spreads, right, instead of using the naked calls, like the example that is shown here. So that will help you have a defined risk, even if there is a reversal that happens. You go short and then it reverses, means you lose everything, right? It may be fearsome. Ferocious up moves can happen, V-shaped moves can happen, may happen. You never know, right? Don't try to predict market. So India VIX greater than 20 is very, very dangerous and cautious. Now may not be good for the option, neither option buying nor option selling. Option buying, no, because it will be too choppy and your gains may get wiped out and you will end up in exactly the opposite side. Selling, because you never know whether the VIX is going to drop or further go about 20, 25, 25, 30. You don't know that, right? So another thing is long-term investing is the time for that, because fundamentally high quality stocks, if you're buying, you can get at a cheaper price, and then there's a time to go for that. We can have a percentage correction based index buying that can happen, like Nifty index if you are buying, right? Nifty Bs or any of this index ETFs if you are buying. At certain 5% you buy something, 10% you buy, or depending on what percentages that you think that you should do it. It will be a good strategy to gain a lot when the market bounce back, which definitely do at some point in time. Another point is that the COVID news alone may not be the reason. As we had been talking in each of our analysis, we are talking about the Fed tapering news. It's going to start in November, right? Money printing is going to stop if the COVID is contained. Also, money printing and the holiday season is there, the December entire month. So till January first week, this may be there may be chance of nothing happening much because larger players are out of the picture. So these corrections at this 14% or 8% may not, I cannot say that it is ended. So the chance of a rebound, a sudden surge of up move that has been happening every time a dip happens for the last several months may not happen now. Because the market cycle keeps on changing, right? So we had 2 years of big up move that happened from the big crash of the COVID first wave, and then now you're seeing the market changing to something else. You never know, it may be a correction, it may be another crash, or it may be anything. So the market cycle, volatility and all things keep changing. You just need to get adapted and then apply the right strategies and the right diversifications, the right allocations to benefit from the market in case of various cycles. Otherwise all the gains that we had made in one cycle may get lost in the other cycle. So there is no point in doing it. So that is something that you have to be cautious about and careful about, right? And that's all that my view on the market is, and I hope this helps you to reflect on your own view and then form your market overview for the next week's trade. And then if that helps you in any way, consider hitting the like button and share it to your friends and colleagues. And happy trading and happy learning.